March 11th. Mark that date on your calendars right now. While Wall Street is staring at the screens, a physical silver drain is happening behind the scenes that makes the 1980 Hunt Brothers squeeze look like a warm-up. The exact date the music stops is closer than you think. Here is why the trap is finally set. Silver isn't just money anymore. It's the lifeblood of the AI revolution and the green energy transition. But there's a problem. The paper markets are selling silver that doesn't exist. A short squeeze happens when those paper bettors are forced to buy back physical metal at any price. Today, we're at the breaking point. For years, we've seen the same pattern: high demand, low prices, and massive manipulation. But the silver trap has changed. We are seeing record premiums at local coin shops, while the COMEX spot price tells a completely different story. Your audience is already noticing this. One viewer pointed out that when savers and investors demand anything but paper, or ABP, the real price discovery begins. The problem is that the big boys are suppressing prices to keep their industrial costs low, but they are running out of physical inventory to back those paper contracts. When the warehouse hits zero, the paper price becomes irrelevant. This isn't just about a few clever investors trying to corner the market. This is a global movement. You see, the paper-silver market, places like the COMEX, have been playing a dangerous game for decades. They've been selling claims to silver, literally, pieces of paper that represent far more metal than they actually hold in their vaults. It's a system built on confidence, but that confidence is eroding fast. Every time an investor decides to take physical delivery, a real bar of silver leaves the warehouse, and those bars aren't coming back. The disconnect between the paper price and the real-world price you pay at a coin shop is the ultimate red flag. It tells you the physical market is screaming for more, while the paper market tries to pretend everything is fine. But how long can that last? Look at the indicators. China and Russia are stacking in secret, and industrial demand from Samsung's new solid-state batteries is about to consume more silver than we mine annually. This isn't just about jewelry, it's about the very infrastructure of our future. Historically, we've seen silver outperform gold by a factor of 10 during a squeeze. Many of you in the comments have said silver is the new gold, and that the current gold-to-silver ratio is a Ponzi scheme waiting to break. We are seeing a shift where AI algorithms are now controlling price action, creating a feedback loop of doom for the short sellers. As one viewer noted, the use of silver in AI is not sustainable. Something has to give, which that something is the price floor. So what happens when the dam finally breaks? It won't be a gradual rise. It will be a sudden, violent repricing. Those who hold paper contracts will be left holding worthless IOUs. They'll rush to find physical silver, but there won't be any available at the old prices. The industrial users, the tech giants, the governments, they will have to pay whatever it takes to secure their supply chains. And that's when the true value of physical silver, the metal you can hold in your hand, will be revealed. This isn't a prediction. It's an observation of a system under unbearable stress. The pieces are all in place. The industrial demand is non-negotiable, the investment demand is waking up, and the available physical supply is vanishing. This isn't about getting rich quick. It's about protecting your wealth from a system that is fundamentally broken. It's about understanding that real assets, things you can touch and hold, have intrinsic value that can't be printed away or manipulated forever. The disconnect we're seeing is the final warning shot. The big players are trapped, and they know it. They've been suppressing the price for so long to benefit themselves, but they've created the very conditions for an explosive move upwards. They've run out of road. Every ounce of physical silver that leaves the market for good tightens the noose just a little bit more. And soon, there won't be any slack left. Think about the implications. What happens to the green energy transition if the cost of a key component skyrockets overnight? What happens to the AI industry when their essential material becomes unobtainable? This goes far beyond just our portfolios. It's a seismic shift in the global economy. And it's happening right now, whether the mainstream media reports it or not. The signs are there for anyone willing to look. So keep your eyes on the physical market, not the manipulated paper prices. That's where the real story is being told. Thanks for watching, and don't forget to subscribe for more updates as this situation develops. We'll be tracking it every step of the way. Are you ready for what could be the biggest financial event of the year? We're talking about silver, and specifically, a date you need to mark on your calendar, March 11th. Why is this date so important? It's the contract delivery deadline on the COMEX, and all signs are pointing to a massive shift in the market. Normally, many traders just roll over their contracts or settle for cash. But this time, a huge wave of industrial users is expected to do something different. They're going to demand the real thing, physical silver bars. This is the moment we've been waiting for, the day the so-called naked shorts might finally get exposed. So where's the proof? Just look at the inventory levels at the LBMA and the COMEX. They've been plummeting. The vaults are getting emptier and emptier. It's a simple case of supply and demand. As one of our community members wisely pointed out, if silver is going to be so important, then what's in the ground is most relevant. And that's the core of the issue. The silver in the ground isn't being mined fast enough. We're facing an annual deficit of around 1.2 billion ounces. The world is using more silver than it's producing, and the stockpiles are dwindling. This is where the story gets really interesting for anyone holding physical silver. When these big players, the banks and financial institutions, can't find the bars to deliver on their contracts, they have a problem. A big one. They'll have to go out into the open market and buy physical silver from wherever they can find it. And who has it? People like us, the stackers, the ones who understood the value of holding a real, tangible asset. This is the classic setup for a short squeeze. It's not just a wild theory, it's basic math. When physical supply disappears and demand explodes, prices don't just go up, they can gap up violently. We're talking about a potential move to 3-digit silver. Think about it. For years, the price has been suppressed by a flood of paper contracts, what many call the paper silver trap. But you can't print physical metal. March 11th could be the day that trap finally snaps shut. Those left holding paper contracts might find themselves with nothing, while those holding physical metal could find themselves in a position to create generational wealth. It all comes down to that timeless principle. If you don't hold it, you don't own it. Now, this isn't just about making money, it's about a fundamental revaluation of real assets in a world awash with debt and digital promises. Silver isn't just a shiny rock, it's an essential industrial metal crucial for everything from solar panels and electric vehicles to electronics and medical devices. Its dual role as both an industrial commodity and a monetary metal makes it unique. The industrial demand is non-negotiable and it's growing every single day. As the green energy transition accelerates, the need for silver will only become more critical. This isn't a demand that can be put on hold. Industries need the physical metal to build the future. So when they come calling and the vaults are bare, the real price discovery will begin. The price we see on our screens today is largely a reflection of the paper market. The true price is what someone is willing to pay for that last available physical ounce. So what do you think? Is March the month that silver finally breaks free from its paper chains? Or will the banks find another trick up their sleeve to kick the can down the road? I want to hear from you. Drop your squeeze date predictions in the comments below. Let's get a conversation going. If you found this analysis insightful and want to stay ahead of the curve on the unfolding physical silver story, do me a favor and hit that like button. And make sure you subscribe and turn on notifications so you don't miss our next update. This is a fast-moving situation, and we'll be here to cover it every step of the way. Thanks for watching.